Hello, this is George. I have a quick one for you. I wanted to come on line and talk about a setup that we use very frequently in the trading room, and it's the Harmony Wave setup. And it's been very instrumental in our success, and I want to share that the rule-based system that we use to capture that wave and how to enter that trade and how to get out of it and how to stop yourself. So let's do this. All right. So what we got going on here, and I'm referencing Friday, because the Friday is a great demonstration of how that setup actually works. And what we had is a 200 NT Rinko one candle reversal. So whenever you have, if you ever want to watch or you want to participate in a directional movement in the market, you would have to have the 200 NT Rinko and the 100 NT Rinko, going in the same direction, and that gives you the highest probability of a directional move. So we were looking for that, and we got it once the market broke into the below the 80. That's 12,380. And then the market consolidated and gave us a captain setup short. So even if that captain setup short was not available, or did not present itself, we did have that condition, that first rule. And that rule is to have the 200 and the 100 NT Rinko basically in the same direction, meaning the prior candle close is both are going and facing down in this case. So once that happened, that's rule number one. We move on to rule number two, which is we need to see a change in the cloud. And that's what we got right here once the market shifted and basically shifted around 12,414. The minute the market did that, and it gave us a cloud negative or a harmony cloud negative. So once that happened, you're looking for another thing, which is a harmony wave. So what is a harmony wave? A harmony wave is, it captures momentum. It literally tells you that the averages are changing in a certain algorithm way, that you are picking up speed, momentum, and volume. Okay, so we programmed it to really gear itself to capture those three elements. And right there, that gray zone that you see right here, that gray zone is the harmony wave. So that harmony wave started right here, and that change in color told us, listen, get ready for a change in personality. And then right here at this level, which is about 12,407, the market started a new harmony wave. Now, let's clear that for a second. The entry point for the whole, in that area, in that zone, we are looking for an actual signal. So first, we need an environment that tells us, hey, listen, look to the short side. That's rule number one. So how do we define it? The 200 and the 100 are in sync and in harmony, facing the same direction. In this case, is short. The second rule is we need an aura cloud to shift from positive to negative. It happened right there. Third, we need a signal in that area, and especially the most lucrative signals are between target number one and the entry point. So that is the entry point to the system, and that is target number one. And as long as the signal happens in this area, that is a premium behavior. So the market gave us an actual, what we call here a switch trade, and that switch trade happened at 12,400, which is a whole number, but nonetheless, it did produce, and the stop to that rotation is two places, actually 3-1. You're looking at 410, you're looking at 414, and ultimately the stop for that whole rotation is 26. And depending on how aggressive you want to go with that trade, typically we just take a 10-point stop and just move on and reposition ourselves. Now, target number two hit, market rallied to the middle of the range, but look, no change, no shift in the harmony wave. The harmony wave stayed intact. Market hits target number three, reverses back a little bit, and some of the shorts cover. But guess what? Again, no harmony wave disconnect, and the market flushes into target number 4. Then from there, it goes to target number 5. And typically between target number 4 and 5, you get counter trend behavior. And then that's what happened, is we had the first disconnect of this harmony wave, and it happened exactly right here at 320. So you went from basically 12,400 into 320, and you're looking at an 80-point rundown in that behavior. The market disconnects, then reconnects. The same behavior told us, get ready and let's go. And the market gave us another harmony wave, disconnected and gave us another harmony wave. So in this sequence, we received 3 tradable harmony waves that got us all the way to target number 6 at 275.75. Okay, so you're looking at basically 130-point rotation in this market. And here we actually broke Globex and flushed under it. And the market actually, in this case, gave us, what is that, 3rd, and this is the 4th, and this is the 5th harmony wave. This is the 6th harmony wave. So it was a giver on that rotation. And then the market gave us a captain set up long here and reversed. So that kind of concludes that whole rotation. And typically you don't see them go to target number 6 that quickly, but ultimately that's what happened on that Friday. So we are hyper focused in the trading room on capturing that type of a trade, and constantly looking to get in at the beginning of a harmony wave, not the middle of it, and definitely not toward the end of that move, unless it disconnects and reconnects. And at that point, then we have another good reason to participate in the next wave of price action. So I wanted to share that with you guys, and be on the lookout for our streams that we do on a daily basis, and you'll see this in action every single day. And have a wonderful day.